How's it going? Today in this video, I'm going to show you how you can instantly figure out whether or not you can qualify for a mortgage loan in order for you to pursue your goals of home ownership. All right? What's up, guys? It's Cedric Andrew Alvarez today, bringing you a super valuable video about buying and selling real estate. Now, before we get into it, I do just want to say thank you so much for popping over to the channel and taking a look at this video. If you haven't already, please hit the subscribe button below. It helps us just gain traction on YouTube and also get in front of more people who we can help with our real estate videos. Now, what we're gonna talk about today and what I'm gonna show you guys is how you as an aspiring, new homeowner can actually qualify yourself before you waste time and energy going to the bank, filling out applications online, things like that. I wanna show you two really quick examples and strategies that you can instantly use to make sure that going after a mortgage application is something that's feasible for you, okay? It's really easy and it's a really quick way to qualify yourself to make sure that it's even worth your time. So when we're talking about going to a traditional bank to get a mortgage loan, right, there's two factors that really come into play that we have to consider, okay? First is eligibility. Second is affordability. Now, there's really two factors that the bank's gonna look at when determining if you're eligible for one of their loan programs, okay? The first thing they're gonna look at is your FICO score, otherwise known as a credit score, okay? Now, if you're buying your very first home, what's great is there's a lot of great first-time home buyer programs out there, and a lot of them fall underneath the FHA loans, okay? Now, what's great about an FHA loan, real quick, is just that it allows you to get approved with a lower credit score, okay? And a lot of times require a lower down payment as well. Now, I do have other videos talking about the pros and cons of FHA loans. I don't want to spend too much time talking on the specifics of those, but just know that if it's your first time buying a home or you have a lower credit score, you can still qualify and buy a home that you really love with an FHA loan. Typically, you're gonna want a 580 or better, but that doesn't disqualify you just yet. There are certain lenders and certain programs, and this is where you really wanna ask your realtor for advice, but I've seen people get approved for FHA loans with as little as a 500 or a 540, guys. So, a lot of people think they're in the low 600s or under 600 and they can't qualify for a loan. I just wanna let you know that that's totally a myth. I wanna bust the BS right now and say, if you're anywhere from 520, 500 up, it's really worth inquiring about if home ownership is one of your major goals, because there are loans out there that you can become eligible for. Real quick, if you don't know what your credit score is, there's tons and tons of tools out there where you can get a really good estimate at where you're sitting at and what your FICO score is. One that I always like to recommend to clients and that I always use is creditkarma.com. I'll actually throw a link below this video so you can just go straight from the description to there. It's a free evaluation, guys. Now, I will just give a little disclaimer out there. Credit Karma isn't 100% accurate, but if you're looking for a free, quick version that is really is accurate within the ballpark, a few points here or there, if you really want to know and you're eager to go out and get pre-approved and you need to know what your credit score is, use Credit Karma. It'll be linked below, okay? The second thing that's gonna determine if you're eligible or not for the loan through the bank is your income and your employment, okay? Now, I'm not really here to tell you advice on what job you should have or how much you should make, because honestly, you can fit into a ton of different loan programs no matter what your income is, guys, okay? The only thing that really matters to make sure you're eligible for a program is that you have consistent income. You need to show the bank that you have a full-time job, that you're working a consistent 40 hours a week and you're getting paid, whether it's once a month, every other week, whatever it is. You need to show that consistency of income coming in from your employer, okay? As long as you're good on that and you're not just hopping from job to job or sporadically out of work, you should be fine, and there should be a loan program that works for you and that you're eligible for. Now, the second thing the bank is going to determine is the affordability of the loan, right? Basically, it just means that with your financials, can you afford the monthly payment that's gonna be owed for your mortgage? Now, the main thing that the bank looks at in determining if you can afford the home, it's called a debt to income ratio, or the bank says DTI for short. So if you ever hear anybody say that, that's what it means. Basically, the DTI or debt to income is the bank taking your total income, right? And then finding the ratio between how much you keep and how much you have to pay in debt. So what they're going to do is they're going to ask you for other credit cards that you have open and what those minimum payments monthly are. They're gonna find out if you have any like car loans or student loans or even any other home loans, right? And they're gonna add up all the monthly debt that you have, and then they're going to basically determine with your income if you can still cover those debts and the debt that the home is going to have with that monthly mortgage payment, okay? So what you can do is you can actually sit at home and figure out what your debt to income ratio is yourself in order to determine if it's worth going to the bank. So there's a couple steps in doing this, but it's super quick and super easy, all right? First step is you're going to go online and look for a mortgage calculator. There's tons of free ones out there. There's even apps you can download on your phone, or I'll even link one down below this video, and there's one on my website you can use completely free. Now, what a mortgage calculator does is it puts in the estimated home price, what you want to buy a home for, then you put in your down payment, and then what it's going to do is it's going to spit out an estimated monthly payment for your mortgage. Once you have that monthly payment, you know, give or take, what you're expecting to be paying month to month to the bank for that loan, right? Now what you want to do is you want to add that amount, that monthly amount, you want to add that to your other existing debt. Add up all your credit card payments, add up all your monthly car payments, everything like that, and you want to have a monthly figure that you have to pay each month towards your debt. Then what you do is you take that number and you divide it by your monthly income, okay? Simply put, if I make $5,000 a month, let's say, and I have $1,000 a month in debt, I divide 1,000 by 5,000 and it gives me a 25% debt to income ratio, okay? Now here's the thing. If we're just going off the previous example with the FHA loans, low down payment, low credit score required, most FHA loans require a debt to income ratio of no more than 43%, okay? What that means is that with all your debt added up and your monthly mortgage payment, those debts cannot exceed more than 43% of your monthly income, or you won't qualify to be able to afford the loan. So in order to save yourself time, it's super easy just to calculate the debt to income yourself at home. I mean, everybody knows what their monthly credit card payments are, and then just use that free mortgage calculator below this video that I said I'd put in for you guys. It takes about 10 to 30 seconds to fill out and get that estimated monthly payment. Once you add that to your other monthly debt, you should be able to divide that by, what you're making every single month from your job, or your combined income if you're husband and wife. But it really just saves you time because you can figure all that stuff out on your own, guys, and then you don't have to go to a bank and get your hopes up and unfortunately sometimes get declined. That's the worst feeling in the world. But I also want to tell you that there's a lot of other people out there who disqualify themselves and think they can't get a mortgage loan when really they have all the financial security and all the right qualifying factors to get approved for a mortgage today if they really wanted to own a home. So that's the reason I'm making this video. It's to give the power to you as an aspiring homeowner, okay? Take it upon yourself to do these quick calculations. Spend the next 30 minutes doing it, and you might be pleasantly shocked to find that home ownership isn't too far away from, where you're at currently in life. So I really hope you enjoyed the video today. I really hope it makes sense. If you have any questions at all, feel free to hit me up in the comments below. I love answering questions. I know especially for brand new homeowners out there, it can be a little scary and there's a lot of clarification that needs to be done. As a licensed real estate agent, I'm more than qualified to answer all of your home buying questions and give you recommendations as well for next steps to take. Like I said, guys, at the beginning of the video, if you haven't subscribed, please do that. There's more and more videos coming out every single week that help home buyers, home sellers, and home investors all alike. So join the community, get more educated on one of the biggest purchases that's ever gonna happen in your life, and I'd love to connect with you guys, okay? Until next time, I hope you're doing well, fam. Take care. Peace.